When to sell your crypto, a conversation as old as the wind and the stones and as mysterious as the stars. Okay, but seriously, at some point if you are investing in crypto, you're going to want to sell. I know, it can seem crazy, but selling and making money is why almost everyone is into crypto. Sure, some of us stick around for the financial revolution, but let's keep it real. You didn't invest your money to lose money. You invested to have more than you started with. So this video is going to explore when to sell your crypto. Now before I break that down for you, while selling may be a part of crypto that remains an enigma for some, the buying part tends to be a lot easier. Now, if you are looking for a great place to buy Bitcoin and actually a whole range of other different cryptos, then you need to check out Kraken. Kraken is one of the oldest and most reputable exchanges out there, and it is a great place to buy and, yes, even to sell your crypto. There's a link down below where you can get signed up. So there are two very different conversations to have here. One is about trading, the other is about investing. But really this conversation is going to be about investing primarily, but the wisdom shared here will also be very useful to aspiring traders, because at the end of the day, everyone is trading. It's true. Our time frames and our expectations are just a bit different. Now, before I break down the different profit-taking strategies, we need to have a serious conversation about Bitcoin. Why? Well, because Bitcoin is for many people a form of taking profit in of itself. The game has become, for many people, do everything possible to get more Bitcoin. Trade altcoins, long over on Bybit, get as much Bitcoin as possible. Create and preserve your wealth. Maybe at some point you'll sell off a little sliver here or there, or better yet, trade it with other Bitcoin enthusiasts for goods and services in the future. Or even crazier yet, never sell your Bitcoin. You're gonna take those and just hodl those bad boys to the grave and take your private keys with you. Screw you, grandkids. You're not getting this Bitcoin. Okay, well, that might be a little bit extreme. But the Bitcoin as a form of wealth protection idea, that's a serious conversation to think about. Bitcoin is a permanent escape from fiat. All fiat currencies are one way or another on a trip to worthlessness. Sure, some take longer to get to zero than others, but they are all going there. Just ask people in Argentina, just ask people in Venezuela why Bitcoin is awesome, and you will very, very quickly understand why you will likely always want to have some Bitcoin sitting around in your hardware wallet. Personally, there is a percentage of my Bitcoin that I am willing to part ways with. For the right price, of course, or for the right cause, right? Is give money to charity or something like that using Bitcoin, great. Now, maybe you want to buy some land or something very significant like that. Also a very interesting choice. But the majority of my Bitcoin is a wealth preservation tool, providing a solid pillow of financial assets to build my future and my fortune on. And yes, Bitcoin can take years to provide significant returns, but the history of Bitcoin has shown its power to not only build wealth, but also to preserve wealth in the long run. There are very, very few cryptos that, in my opinion, are something that I see as long-term plays that I intend to hold for the foreseeable future. Monero is one of those. Monero's got a very, very clear privacy use case for me, and Ethereum is the other one that comes to mind for a whole different range of reasons. Everything else in my portfolio, gonna sell it off for cash, man. Cold, hard, dirty cash. Or Bitcoin. To be honest, also a lot of Bitcoin. So at some point, those trades will happen. They'll be flipped high to buy something else on the low, maybe. Repeat that process. Keep building the wealth. You guys know how the game works. Now, that being said, not everybody thinks like that. Many investors, and this might be you, you're just here to make more cash money for your bank account. You don't care about Bitcoin. You just want to get rich. Probably want some Bitcoin too, long term, just telling you, but that's okay. That's okay if that's what you're here for. Welcome to the party, amigos. So assuming that you are not going to hodl everything to the grave, then let's have a serious conversation about selling. So just how the heck do you know when to sell your crypto? Well, here's the simple truth. There's not really a clear answer to that. I can't just say, do this at that time and you're gonna be great. But here are some ideas that might help you to make your own decision about when to sell. These are tools to get your brain thinking. But the most significant thing that I want to highlight is that if you made a profit on a trade or on an investment, congratulations! Be happy. So often investors get stuck in this mindset that they have to perfectly time the top and perfectly buy the bottom. You don't have to do that. There's so much opportunity in between. Except that you'll be buying and selling somewhere on either side of the high and low watermarks, and you're going to be a lot more chill about your life. Because it's okay. There's an insane profit zone between the top and the bottom. And it is one of the many reasons why slowly entering a position at many different price points, dollar cost averaging, it's such a powerful method for stacking your investments. Make sure, of course, as always, to practice risk management strategies like using a stop loss to limit your downside and to lock in profits as the price of an asset goes up. Sure, you might exit a position after making 20x on your money to only watch it go up another 50%. That happens. No one can predict the future, and technical analysis only goes so far. Be happy with a profit. I mean, seriously, in the example I just gave you, you 20x'd your money. That is crazy, man. Be happy. Once you exit the trade, then just move on with your pile of cash or your pile of Bitcoin and relax. Be happy. You need to accept that you will miss out on getting in early on some coins, and yes, you will miss out on the absolute top of many trades. It's okay, don't beat yourself up for this, especially if you made a profit. It's going to be okay. The market is just full of opportunities. Don't dwell on what might have been, and don't let paper profits only be paper profits. You gotta make those into real profits by trading out. Now, on a more practical level, you need to have a plan. And I know that sounds super simple. Okay, genius, Lark, have a plan. Well, seriously, most people have no plan when they get into crypto, which is exactly why they miss out on making gains. Every trade, every investment should have a plan with clear goals, even if that plan is to screw your grandkids over and take your crypto to the grave with you. That's an option, but if that was your plan, that's your plan. If it's not your plan, then you made a mistake. But again, most of us will not go to such extremes of hodling to the grave. That doesn't mean to say that you can't have really, really big targets either. You can, but just understand that your time preferences will be much larger with bigger profit targets. So, for example, if you want to sell your Ethereum when it reaches $1,000, cool, man. Sit back, be patient. It might take a really long time. Now, if you want to sell your Ethereum for a 20% profit only, that's also cool. It's going to take a lot less time for that to happen, but you're going to make less money. You may even want, of course, in your planning of your strategies here to really just take a piece of paper, write price targets down. Writing stuff down, writing down your goals of your investments, it's really important because it can help you stay super disciplined when the greed starts coming back in and everyone's saying, this is gonna go up forever. You can just casually exit, happy in the knowledge that you made some sweet profits. Did you make every penny possible? Maybe not, but you probably did very well, and you locked those profits in. Other people watch paper profits go to zero. Now, price targets are great at keeping you disciplined, but there are also some other considerations that you might want to keep in mind. The biggest one's got to be greed, and I think this requires a few more mentions than what I just did. Human emotion is freaking crazy, man. Totally. And as the old saying goes, be fearful when others are greedy, and greedy when others are fearful. It's powerful. It's true. Irrational euphoria can be a good indicator to you that things are getting way overheated and that you might want to consider exiting your positions or selling some percentages of your positions. Probably not a time when you want to be buying at the parabolic top when everyone's saying this is going to go on forever, everyone's going to get super rich. That's a sell signal, usually. Now look, sentiment is an important, if indefinitive, factor to take into consideration when choosing when to sell. You do not want to sell when the market is driven by fear, though. Something you definitely want to keep in mind. Far too many people buy the top, sell the bottom. It's the age-old mistake, and that's driven by greed at the top and fear at the bottom. Again, you want to think to the inverse of that. Now look, chances are when the greed times come, and they will, they always do, you could find yourself gripped, unable to sell. The greed has taken over your mind, throwing your plans out the window. And then you sit and watch as your insane profits, that chance to take those profits, it closes. And the retrace comes, the retrace always comes. And paralyzed by greed, you sit there telling yourself, this is going to go up again, this is going to go up again. That 10x, it wasn't enough. You want to get 11 or 12x. And you sit there waiting for a pump that's never going to come again. Greed is your biggest enemy in investing. Master your emotions. You gotta be cold to the market, man. Steady. Here's a quick exercise for you to ask yourself when you're thinking of these situations. If it's gonna go up forever, right? Ask yourself, would you feel better making another 10 or even 100%, or would you feel worse losing 99%? Where will you have deeper regret? You need to decide between taking and making profit, or perhaps missing out on farther gains, or losing all potential profits, all those paper profits, holding on to your position into a painful price oblivion. Far too many of us have learned that lesson. Don't repeat that mistake. That should be a good question to help you keep focused in times of high greed. Now, a common strategy that many investors use is to ladder out of a position. So in this situation, just give you an example here. So let's say that you just buy one Bitcoin for around $10,000. Now at $30,000, you sell a third of your Bitcoin. So now you have returned your original $10,000 investment, and you have 2/3 of a Bitcoin left that you can just sit back and just let run. That's free Bitcoin now. Then when Bitcoin gets up to $100,000, maybe you sell half of that and just take those profits. And then you keep the other third of that Bitcoin for a moonshot. Just sitting back, chilling. Maybe Bitcoin goes to $1 million, but you're sorted. You have some Bitcoin, and more Bitcoin than most people are ever going to have. Or maybe you sell that last third of your Bitcoin and Bitcoin gets up to $200,000. Look, such an approach will ensure that you recoup your initial investment and you make some profits along the way. And maybe also get to maintain a small position in that crypto to let ride for a moonshot. Now, such a process of ensuring that you are consistently taking profits will ensure that you become rich in reality and not just rich on paper. Doing this will also lock in sufficient wealth to be able to reduce a lot of life's money-related troubles. And, of course, if you do keep a moon bag, it still leaves you with upside for the future of crypto, assuming that we are still early in the crypto game, but you have also limited your downside risk of some kind of serious multi-year market collapse, just like we saw recently, actually. And look, that's only a super basic example, but I just want to give you the mental framework for how you can Imagine laddering out of a position, and there's a lot of different variations you can do with this, and it's really up to you how you decide to do that. Maybe you decide to sell 10% of your position every time it goes up by 20%. That's an option too. There's lots of different options, tons of crazy number of combinations you can make for how to do it. But laddering out can be a very solid strategy. Whether to ladder out or just to sell everything at some big high number, that's for you to decide when you make your plan. Also, waiting for long-term price targets to hit means a lot of just sitting around waiting for crypto to go up, which is why a service like BlockFi can actually really add to your long-term crypto stack. I mean, you can be earning 5.1% annually on your Bitcoin, 3.6% on your Ethereum, and 3.8% on your Litecoin, all while just sitting around waiting for your price targets to hit. And while those percentages may not seem like totally insane numbers, they can actually make a really, really big difference on a long-term play. Link down in the description if you want to learn more about BlockFi and how it can work for you. And finally, there are some technical indicators that I want to share with you just to see how technical indicators can actually help you decide if now is the right time to exit a position or not. Of course, you have to keep in mind that a technical indicator is not a crystal ball. It is just an indicator. And I'm only sharing a couple indicators with you here. This is far from an exhaustive list. You'll need to take a lot of time to actually learn technical analysis to be able to use these indicators effectively. Now, a good indicator that I like to have a look at is the RSI. This helps you to see if there are way too many buyers buying up an asset or not. So we can take a look at this icon chart here. The RSI hit an insane 97.5, which was a pretty gosh darn good time to sell. Now, that's not to say that there won't be more price action for Icon moving forward, but you can see that particular cycle topped out there with way too many buyers coming in and way too much pressure, way too much overbought action going on. Now that's just a daily chart. Personally, I find for looking at these more macro decisions of long-term investing, looking at the weekly or the monthly can be a much more informative process. Here is an Ethereum USD chart on a larger time frame just for reference so you can see what that looks like. Now, of course, the RSI is not a perfect tool by any means. You often want to put multiple indicators together, but it can certainly help you spot when a good time might be to be exiting that market. Now, another great tool is moving averages. Again, we're talking about macro trends in the market here. So in particular, if you look at the 50 and the 200-day moving averages, these moving averages are really great for identifying that big market movement, but they are a lagging indicator, so they may not give you that point of maximum financial gain, but they are useful to see the big market turnarounds or turn-ups. So watch for that when the 50-day, the orange line on the chart here, falls back below the 200-day moving average. Now, this is the so-called death cross, and that usually signals that the markets are going to be heading into some big trouble, so you may want to consider exiting your positions if you haven't already. Now, this is not going to be the point of maximum financial gain, because this is a lagging indicator again, but if you did get in at the golden cross and then exit at the death cross, well, you're likely to have significant financial gain. If you've missed that parabolic top and you're still holding on, you're a bit doubtful, then it's probably a good time to get out of some positions. Again, it's a lagging indicator, so it's worth keeping in mind that you're not going to hit the absolute parabolic top on that. And finally, just to share one more idea with you, and again, this is far from an exhaustive list. Technical analysis goes way deeper than the 2 minutes I'm spending on in this video. So the MACD. Now at a very basic level, when watching the MACD, watch for the orange line to cross on top of the blue line. That can be an indicator that the market cycle is topping out and that you may want to consider taking profits. These indicators can be very useful in helping you to really catch those market trends as they are hitting major reversal points. And yes, that's only a few indicators. I mean, there's a lot of other indicators that I use when making my decisions, and you can make multiple videos on each indicator in of themselves. So do take some time to learn how these different tools can help you in your investing decisions. You don't have to learn how to use technical indicators, but it can certainly help your journey. And my final thought for this video is a quote from Bernard Baruch. Nobody ever lost money taking a profit. Remember that. So, my question for you today, and I really think this is actually a great question, that there's going to be loads of knowledge shared down in the comment section, so make sure to head down there, join in the conversation, share your wisdom, or learn wisdom from others. So the question for you is, what is your profit-taking strategy? Is it something that I've mentioned here? Is it something else? When do you decide to take profits? How do you decide to take profits? What is your strategy? And of course, thank you in advance for sharing your wisdom with everyone down there in the comment section. Thank you for watching today's video. I hope it was useful for you. And if it was, make sure to leave a thumbs up on this video and subscribe to the channel if you are new around here. Long live the blockchain, and peace out till next time.